Stavros Tousios for M4Markets. Welcome back. We're going to have a quick look at euro dollar and gold today. On the 4-hour, you see that we have had this divergence playing out for quite a while on euro dollar, and prices have actually started to descend, and we have crossed below the 23%, missed the 38, but this of course suggests that the next move to the downside, should it take place, would be around the 108.6 area. Down on the 1 hour, just to pay attention a little bit more in the shorter term, you will also be able to see that we have an actual ascending channel that we've just actually bounced on, right? So if we do cross below that low over here, the next level is going to be indeed 38.50. However, the concern here that we have for bulls is that if we do break that low, then maybe there's going to be a trend change all the way to the down to, well, to the previous low as well, right? So the 50 is going to be a very important level, a very critical, since it's also a previous support from the April 2nd or so 3rd swing low here that we see on the charts. We are not seeing any sort of directional clues from the RSI at the moment. But the truth is that if we do fall further down, maybe we're going to see a hidden divergence on the RSI, because the RSI pace is not the same as the pace of the price falling, which would suggest that, you know, another leg to the downside could offer some sort of respite for a potential retest. And from there, of course, we'll be looking for further clues. Now, when it comes to gold, and let me just go and start again with the 4-hour chart, we are seeing multiple divergence signals on the RSI here. Okay, we have come all the way up to 2050, which is a level that we talked about in previous videos, and we've come actually below 23 as well, failed to cross below 38, very similar to Euro USD. Okay, and we are currently flirting with 23% on an intraday basis. So if we do lose 23, then the next level to the downside is 38, and then we'll go to the 50. We're talking about Fibonacci levels. However, we do have a very important level at the 38%, because it is a previous swing high, okay, from like the beginning of February. And if we do lose that level, then this would open the door for gold to revisit all the way down to that level, the 1800s. And if we do get there, then there is going to be risk of reversal. In case of further downside, I would prefer the 50 or the 61.8 to hold, to kind of support with probabilities for further upside, okay? Because if we do lose that level, then it's going to be very hard to return back within the uptrend. However, if we do stop around 50 or 61.8, the chances of further upside are going to increase, and we're going to go probably to record high. Now, if we take a look at the shorter term quickly as well, so far no directional signals from the RSI or the prices. We are probably going for a triple bottom here at 1981, but let's not forget, triple, it's not really a bottom. The next one is probably going to bring us a bounce and a breakout, because this is what happens after third attempts, most often than not. Now, the RSI doesn't seem to be in divergence, or the pace at least doesn't suggest there's going to be a divergence, which means that we might get a breakout before we see an actual bounce, which meaning, for example, we might not get a triple bottom here. 1980 might break initially, we might head down to 1950, who knows, and from there we might get some sort of signal from the RSI for potential moves to the upside. But this is, of course, all based on the RSI.